I was like, oh man, I didn't make the recording. Shoot, I should have made this recording. It was so obvious. It was just so obvious. About 11:30 or so. No, no, no. 10? Yeah, no, it was 10 something. Yeah, I went to bed early. But anyway, I had marked out this here mitigation block, okay, and no breaker block, and then on the higher time frame one here. So and I had said as price had came down here, I had said price is going to come up here, strike this, and drop, and it actually did. So let's check the times that this occurred. The initial strike right here was at 1 o'clock in the morning, 2 o'clock in the morning. This occurred, and the entry right there at 3 o'clock, 3 a.m. New York time. So we have 1, 2, 3, and we have let's drop this here, here. Now I'm gonna just drop straight to the 5, and then okay, there we go. And I'm going to bring this to 55 right there. Okay. Okay, so this all of this would have occurred already, and price would have been starting to back up, move up, and the fib drop. And looking at the structure, okay, we see no fair value gaps, no nothing strong that would suggest that price would go up to a certain area and drop. I mean, we have this order block here. Okay, so this third candle is very shallow. It's not, it's the high and the low is there, and there's no, um, you know, no high structures that, um, there's not even a big break in this. I mean, it's really ugly over here. So I would have wanted to break down here probably to use this one. So I'm trying to clear my mind. Maybe if I didn't see this here, I only saw this here, and price had already struck here. Um, yeah, I would have probably grabbed a pull from this one here. I think objectively, see a nice, good short-term swing to be broken. This is with all these. It's just not cool over here. So it's a possibility I would have pulled, yeah, from I would have probably done this, and price would have been rising. Oh right, this would have already occurred. So you're right, this occurred already. And drop now, I would have seen that it already did this now. Again, looking at the time, this is 2 o'clock, okay? Between these two, I encompass that third candle. and that's the 2 o'clock. And we know that 3:30 is the like the center of the London, So there was definitely room for more, room for more movements, and so I doubt I would have like just jumped in because this move. Look, it's already an optimal trade entry. Oh, let me get in because now it's leaving without me. I doubt I would have done that. In fact, them taking out a and even up here, they came up and did one strike here, and then came down. And because it's going to be a big move to the bottom, I think I would have also wanted to see more of an M structure form. So it's a big chance I would have waited. For now, this move here, when it came up like this, I could see that I could have got in right here. I could have probably got in here and put the stop loss. 3 pips, 2 to 3 pips above this here. Okay, let's drop this down. Entry here because I wasn't thinking about that 1 hour. But then this is here, but in any event, let's say I got in at this strike here. That's about this is AU small spread 0.4, 0.5, 0.8 sometimes, but it's usually low between 0.3 and 0.5. So I'll just say just round it to 9. Let's say 9 pip stop loss. 9 pip stop loss. And it went against me. Took out this high here. And let's see, make sure it's spread. Would the spread have gotten me? Nope. Spread wouldn't have gotten me. And what I do sometimes is looking at this D1 year minus open, I probably would have thrown another order here. And made stop loss up there. So yeah, this is pretty nice.
Yeah.
Nice. You would have made it. Let's just pull over here and see. Okay, but we'll just work on it here. Got it in here. And the stop loss would have been above here. And 1, 2 to 3 to 1. So we got a 3 to 1, 30 pips already. So yeah, so that's it. May just run up there. Yeah, this was easy peasy. Yeah, this was really nice. Let's see what New York is. 7 o'clock is 14. So that's 7 o'clock here. 8 o'clock. Made a pullback to this here. Look at this. Wow. So this high is 526. And this high is 531. Wow, 26. 5 pipettes off. So we know that ICT teaches the true support resistance. So this here is this fair value gap. Price broke through, and right across we see we have fair value gap here and over here. So this here would have been the institutional order flow entry drill. Again, the time on this one is this is 8 o'clock, and then this here is 9 o'clock. The price came up, struck it, and then it dropped down. It's 10 o'clock right now. So at the moment, from here to here is busy, consequent encroachment. It's somewhere here, so it hit consequent encroachment. Looks like you can drop a fib just to make sure. It didn't hit it. Actually, didn't hit the equilibrium. Didn't hit equilibrium. Okay. You should be checking for news. So all the news events have occurred. 10 o'clock is the last one. So yeah, this knowing that like this move out of it in it and pull these breakers price didn't leave away from them so much. So there's a chance price can actually come back up to strike it. Again, another drop. This isn't really strong, even though I treated this here, when I seen it, possibly happening. This is so cool. It just peaked up a little bit above it. So the high here, 921. Higher, 935. See that? That is something of precision, I tell you. The hourly chart peaked right above that. Nice. Love it when it works out. Later. Okay, so looking at 15-minute, it's about God, that's messed up. How much is moving? Wait, what? So looking at the 15-minute, we have this about to occur right now. This here is about to close in about 45 seconds. And we have a 3-candle pattern forming right here at this about to form right here at the bottom of this fair value gap. Right here was the institutional order flow drill, entry drill. This here came all the way up here, and I was like, I should get in now, But let's wait for confirmation for the 3-candle pattern, and then the stop loss will be on the other side of this fair value gap up here, right at this point here. The time of the day right now is 10:14, which is the beginning. The turn from 10 to 12 is it just occurred. So the pullback already happened, but if it comes up some, like that much, like now, let me get it. Yeah. Okay, and this here will go here. And I actually wanted to jump down to the minute because I would want to look for structure here to get a, you know, let me just hurry up. Okay, that's 15. We go down to the 1 minute. Okay. So, 1 minute, 17, 14. Okay, what structure can I? Oh wow, I didn't know I brought the whole thing. I thought I copied it.
I said fall back to the gate.
Anyway, gosh. Okay, so we have these volume imbalances here. So I will get in here.
Now wait, I gotta replace some of these. They're not.
This is not a good. This is pretty ugly actually.
Well, you do that. This is crazy.
I actually came into an optimal trading tree area. So I would want it to come back up to here. I mean, I actually jumped in the trade already. This just is not showing it right here. I did jump in. But what I wanted to do was I wanted to get a, you know, to get in. You know, I want to get in on a, 7 pips. Even though I got in already, I wanted to get in and be able to create. So basically, if I would have waited for here. Okay, so I wanted to use a structure of the 1 minute so that I can get a lot size and the pull from the 1 minute off of a 15-minute 3 candle pattern that just occurred. This is a 3 candle pattern that occurred, and I jumped in on this one. When you go to the 1 minute, it throws it off, but this is where I actually jumped in at. And as you see, that's a big stop loss way up there. Yes, it's, what was it, 7, 8, whatever. Let me go back. What? Wait. Oh, the other one? Oh, they are both there. That's 20. Oh my goodness. Gosh, what am I doing? Anyway, right here. Yes, come up to this imbalance right here. So for this setup, which is where I should have been at on a 1 minute, we have the 3 candle pattern, and we want price to come up to this order block here. But I got it right over here. We want to come over here, strike this. Come on, you can do it. I mean, it hit optimum trade entry, already. But looking at this this here. I wanted to fill this. At least come up to here. And it could even come up to the consequent encroachment here. But stop loss will be up here. And of course it's leaving without my other order.
Wait, that's not your character. Let's look at you. You just you know
And these are filled this one. I remember that sometimes when there's something like this, they'll leave one open later or something. So I did hit optimal trade entry. Now it's leaving without this order. This order, again, this order here is technically in, threw it in, but the lot size for this one is ridiculous. I mean, it's really small. The lot size for this one will be based on, 9 pip stop loss. I'm targeting down here. A little scalp, 10 pip scalp. Let me go back to 15 and just take a look. Let's see. Yeah, these lows actually. Back to the one here. Yeah, no, I would have actually been targeting these lows here. Targeting the lows. So yeah, 14 pips. I would have a choice to have it here or there. There's a spot right here. There's a new order block that was created here. And it has a fair value gap here. Back to 15. Okay, so what we have is the 1, 2, 3 candle pattern. It occurred on this PDA right here, the fair value gap. This fair value gap comes all the way out, and it's also an institutional order flow entry drill right here that it occurred on. So some when you get these patterns, these 3 candle patterns, usually a complete type cycle or measurement would be even the low of the third, not the third, whatever, the range of whatever the 3 candles are. There's also another good spot to pull from. I'll go back to 1 and just see if this plays out. See how it goes. Keeping in mind this entry here didn't get taken, so this is just going off of this entry here. Remember, this was done on a higher time frame, and I jumped in and I was like, I'm jumping in. This one was a pending, which was not tripped. And I'm gonna pause and take the sound off. Okay, there you have it. On the 1 minute chart, we hit the take profit, and that's a nice little scalp there. Now if now looking at this here, we see how we have these equal highs here were taken out by this here, and a rapid drop. That meant that with this big drop like this and then a rise, and that only came up to the order this last up close candle before the drop. Right here, you see that? So it came up, hit that last one, filled this all in, and then dropped. Gave that entry there. Because of this motion, heavy move, clearing the stops here. Chances are this was the last area they came up to. They weren't going to go back up there, let people out and no traps or whatever. So what I do sometimes is I'll do the mean threshold of the order block, but up, a little bit above it. So now if I would have done that, this entry on the optimal trade entry, if I would have got in an optimal trade entry, would have been I would have been here before this here. So that would have been a 3 pip stop loss. But let's just take it as though I did as if I would have put it above that. Okay. So just say 6. Okay. So 6 pip stop loss. And we have 13. So 2 to 1 basically. 2 to 1. Now what I also like to target is these here, these numbers here. Okay. This is 25 or closer to the 20 institutional price level. And looking at the time, so between 10 and 12 is London close. And so there was still, even though price came here, there was still time for price to get down to this level here. This is another place that could have been reached for, and I did not analyze on Okay. Yeah. So yeah, what you do is you can also look for higher time frame targets, which would have been um, into this area here. So it could even, I think it is going to come down further. It may even come into to strike, this candle here. The low, high, lower low, making this candle right here, this up close here, the breaker for this structure here. But it can still be an area of interest for an area where price could come down and hit and then turn around. But and anyway, in any event, that was a 15-minute. Just to recap, that was a 15-minute candle formation on the PD array. This is just, it just keeps playing out. You guys watch me throw in a trade real quick. But just to note, those you understand you're on the 15 minutes. One, two, three, and then you once that's about to close, you gotta quickly get over to the quickly get over to the 1 minute, um, and come and look for your entries and stuff off of the PD arrays, off of those things. So as you see in structure, let's come back over here. Um, so we had two areas here. Okay, this environment balance here and environment balance here on these gaps. Actually, let me move this over to see exactly what it is. This one's environment balance. Avoid. So, price came and filled this in, and this here wasn't. It came up close to it, but it came very, very close to optimal trading tree, if not it. Let me see, this is that. This is a 62. 70 point, yeah. So it hit the optimal trade entry. Hard to see because it's so small and they a little tight. So okay. So once it broke and came down, we see price struck this order block here, dropped, came up. Um, yeah, dropped, came up, and it came into real close to this order block here. Didn't hit it exactly, and it left open this little area here. And it came to we do see a crossover here. We see price did come down underneath a swing, and we do see a cross here. We see these fair value gap here. So the consequent encroachment of this or like an optimum trade I'm sorry, institutional order flow entry drill could have been entered here, which it did, which it did come into little more than that, filled it all in. But in any event, it dropped, came up. Now this high here, you see we have low, high, this lower low, it started coming up. If it would have broke above this, if it would have broke above this here, this would have been a break in the institutional order flow. And you could have came in on a higher time frame to see if they were just going to for a deeper retracement to a 5 minute chart, a 5 minute PD array, which that 5 minute PD array would not have broken. Like once it struck it and dropped, if you had a chance to strike it and drop, and it would not have broken formation, the flow. So that does happen sometimes. So that's why I went to the 5 and I just dropped that line there. To show that to be an area where it can turn around at. So it would have broke above this and there's a fake out and drop. Instead, it kept it together. So this here's an M here, you see. High, low, higher high makes this last down close candle, pull that out in time, and you'll see it's bouncing all over that mitigation block. So, what's this? Okay, so it came down, price came up to and hit this off. Let's get this off. Okay, so price broke below the mitigation and came up. It came all the way back up to the order block. The low on this one is, you can't see it. The low is 381, and the high on this one 379. Okay, so we just came right into this little. There's a little tiny gap there. So let me just see if it went above this. 379, 379, exactly the same. So it just came right up to it, and then dropped. Came below. Once it comes below, it validates these two up close candles as being, order block. And it came up, and tagged it and closed within the kind of looks like the consequent encroachment. I mean the mean threshold of the order block. Spiked a little bit above that. Came back in and dropped again. Came up. So see, this order block wasn't violated. This order block, or this one here, the last one here, wasn't violated over there. Dropped, came back up, poked a little bit above this one, came back in range, and dropped again. Came up, hit this one, dropped again. It just keeps doing it. Boom, hit this here, dropped, came up, hit there, wiggled above it, and did do some closing above it over here. But whenever there's an order block inside of another order block, like this whole range here and here, this one here is the strongest one. So let's see the high on that is 330, and the high on this one 330. So it didn't break the high from here, and it just dropped and came down to this institutional price level. This is 25, but 20 is the actual institutional price level. So that's just where where you have expect price to go to. So plus or minus 5. So that's why the 20 price level 25 was marked out. And that's what it did. So it played out very nicely. Even here, just this big beefy candle here. You see, price came up and hit the bottom of it. Dropped. So anyway, really nice price action, right? Yeah. So that would have been a little scalp there. From the 1 minute and looking at the structures. Again, I was moving fast. If I wasn't moving fast and would have took my time, and it was a quick choice to jump in also. So the entry here that was just thrown in on the 15 minute, I think. The market execution, this one. Um, the stop loss you see was really high. It's just so, I mean, um, yeah, that was like jumping in without doing the math, without calculating everything and all that. So just need to be on point. I started talking to you guys and getting ready, but the stop loss was 20 pips, and waiting to get to here would have been a 1-to-1. So just keeping in mind these are scalps. The 1 minute structure, as you see, it all held. Stop loss. Yeah, it could have been way up there, but because of the way this occurred, equal highs, we broke the equal highs, came down, created a nice beefy order block here, and dropped down. This and had these structures here. This was nice to go for a mean threshold, a little above mean threshold. So I had a choice of basically a 4 pip stop loss or a 6 pip stop loss. 6-7 pip stop loss. And if it was a 4 pip stop loss, that's 1, 2, 3. So it would have made more than 3 to 1 before it got down there. bottom of the check mark is what I see. And I saw the red when I declared TP hit. I waited for the red. You have that bid and the ask. I waited for both of them to come down recently before I saw the TP hit. So, yeah, entry would have been here. So there it is, 13 pips. So a 4 pip stop loss started being like a 3 to 1. All right. That's it. Later.